Recording in progress.
Good afternoon, grade 11s. In this video, I am going to introduce you to fixed asset disposals. This is how you sell an asset or dispose of a fixed asset. So, for the purposes of this lesson, I'm going to use the textbook Study and Master, page 137, activity 5.7. So, let's go to that activity. I'm going to share my screen. Okay, so this is the activity. All right, so I'm going to do this in two parts. I'm going to change a few things so that you can, for the purposes of learning. So let's read through it. Part one, use the information to complete the following in the books of Thandi Boutique. Number one is the journal and the cash receipts journal. I'm not going to do that one. I'm going to skip that one for now. And we're going to go to number two, where we are doing the general ledger accounts, the following general ledger accounts. In the balance sheet account section, we are going to have vehicles and accumulated depreciation on vehicles. In the nominal section account, I'm going to introduce you to a new account called asset disposal. We use this asset to dispose of the vehicle. We are not going to do it in vehicles. We are going to transfer everything from vehicles to asset disposal and from accumulated depreciation to asset disposal. And then here, we work out whether we made a profit or a loss. And then whether it's a profit or a loss, we move it then to this new account called profit or loss on sale of asset. If it's going to be a profit, it's going to be on the credit side, just like income. So which means in the asset disposal account is going to be debited if it's a profit, and then it's going to be credited in the profit or loss on sale of asset. If it's a loss, is going to be credited in the asset disposal, and then it's going to be debited in the profit or loss on sale of asset. So a loss will be treated like an expense. So it's going to be debited. We're not going to analyze. Then we go to the information. On 1 March 2017, the first day of the financial year, Thandi sold the Toyota Hilux van to Buddy Motors for 75,000 cash. 1 March 2017 is the first day, which means the last day is 28 February 2018. Then we've got the fixed asset register of the Hilux. It was a 2012 model. It was bought in 2013, which means from 2014, all the years from 2014 onwards were depreciated for 12 months. But then it was sold on the 1st of March 2017, which is the first day of the financial year. This is good for now because you don't have to calculate depreciation for this year. It means this depreciation, which was the final depreciation of last year, is going to be the opening balance on this date or this year, which means it's depreciated fully. So you don't have to do depreciation, which is also a good thing. And another thing I'm going to change, we are not going to use this. This means that there were more vehicles that in Thandi's Boutique's books, but I want us to have just this one for the purpose of this exercise. I just want us to have this one. So, okay, so let's go to our worksheets. Okay, I had started on it. Let's just do this. So we start, so just like everywhere else, we start with opening balances. So the first day of the financial year, balance brought down, and the Toyota Hilux was purchased for 160,000, as you can see. So that is, when we say that's the only vehicle we have, so which means our vehicles account only has 160,000. And then we go to accumulated depreciation. So this is the amount in the beginning of the year. So that's what I put there. March 1 balance brought down 86,272. Accumulated depreciation on vehicles is a negative asset, so it's going to be on the credit side, and vehicles are assets, so they're going to be on the debit side, the increase on the debit side. So now we are on this date, this same date, we are selling this vehicle, which means we will have zero in our vehicles account. So which means we need to remove this assets to have our zero. But how do we remove it? By taking it to asset disposal. So we are going to credit here asset disposal. So the contra account is asset disposal. So we are going to credit asset disposal. This happens in the GJ. Remember, I said I'm going to skip the GJ, but that's where it happens. I'm going to credit asset disposal with 160. I'm going to credit vehicles. Asset disposal is a contra account. I'm going to credit vehicles with 160,000. So that now we have zero in the vehicles account. If we balance it, we're going to have zero. Like the balance brought down and the balance carried down will be zero, because if you say this minus this, you get zero. So there's nothing now. So the contra account, so we credited it here, then we go to asset disposal on the same date and we debit it. So that's the first step that we do. Asset disposal, and then we debit it. So the contra account is vehicles, because that's where it's coming from. It would have been done in the journal, and it's 160. So we are done with assets. They've been updated, but now we need to update accumulated depreciation on vehicles. This is also going to be gone because it is associated with this vehicle that we just sold. So we are going to debit it so that we can cancel it out. We debit this amount. So we are going to take it again to asset disposal. Asset disposal, GJ, and 86,272. And then we take it, so we debited accumulated depreciation, which means we credit asset disposal. Same date, we credit asset disposal. So we have nothing in accumulated depreciation because we don't have a car anymore. We can't have anything on vehicles, and we can't have anything on accumulated depreciation on vehicles because we do not have a car. After today, like on the 2nd of March, we have sold this car, we don't have it. So we are going, so this one is coming from accumulated depreciation. Depreciation on the vehicles. And then that will be, let me just direct text so that we see everything here. So that would be GJ again. And then it will be 86,272. Then that is the next step. So in this case, that is the next step. But in part 2, the next step would have been to update depreciation first. But we don't need to update it now. It's updated and then move it. But in this case, we don't have to. It's updated. Then the next step now is to record the sale. So we are done with these 2 accounts. Everything that's going to happen now, from now on, is going to happen in the asset disposal. So we would have recorded the sale. So they say we sold it for 75,000. Here we sold this vehicle for 75,000 cash. So we would have recorded in the CRJ. That's why they wanted us to do the CRJ, but it's fine. I'm going to do it here. Just post it. Everything that happens in the CRJ means the bank increased. Bank is an asset. So the asset increases on the debit. So on the bank account, we would have, when we are posting on the bank account, it would have been on the debit, which means on the asset disposal, the contra account, which is on the credit. So same month, same day, we received money. So our contra account is bank. We received CRJ, we received 75,000 from the bank. And then now, so we are done with transactions. So the next step now is to find out if we made a profit or a loss. So I can do this by adding both sides. So this side gives us 161. So if 161, you look for the bigger side and you write that one. So this side gives us 161, which is the bigger side. So the smaller side, so you skip a line on the smaller side, but this time there's nothing you write under the total. You just skip a line on the smaller side, which is this one. So I'm going to then write the same amount on both sides like we always do, 161,272, because that's now the balancing, but it's slightly different, the balancing of this one. So please concentrate. We are, so instead of saying now balance brought down, so let's find the difference, which is 161,272 minus 160,000, you get 1,272. So that when you add, I'm going to add this. If you add the side as well, you should get the same amount. But instead of now making this balance brought down, this now will be because it's on the debit side, it's going to go to the credit side, which makes it a profit. So it's going to be profit on sale of asset. Or you can say on profit on sale of fixed asset or on asset. So yeah, if the difference, if the smaller side was this side, it would have been a loss. But the fact that it's on the debit, it's a profit. So that's 172. We are going to take it to this profit on sale of fixed assets. So same day again, because it all happened on this. So same day, there we go. Well, there we go. And then we are going to say the contra account, which is asset disposal. So yeah, you are allowed to, if it's a profit, you're allowed to just say profit on sale of asset. If it's a loss, you're allowed to just say loss on sale of asset. You don't have to say profit or loss on sale of asset all the time. So this one, well, I knew it was profit, so I just wrote profit on sale of asset. So then this is also happening in the GJ again. So like here, GJ, and then the profit is 1272. This is taken. This is an income. Is taken to the what do you call the statement of comprehensive income, previously known as the income statement. Is taken there and is put under the income on top, other income on top. And then, if it was a loss, then we would have taken it to operating expenses. Loss on sale of asset appears under operating expenses. And then we are done. We're done with part one. So this is how you do it. If you do this, then you are done with recording the sale of an asset. So now let's go to part two. And part two, as you can see, I said when you are selling, when there's more than one vehicles in your books. So like in this case, let's follow this. So you have, let's read the last part. The last part says, the following balances appeared, among others, in the general ledger of Tannis Boutique on 1 March 2017. If vehicles are 280,000, but the Hilux is 160,000, which means that difference, there's another vehicle or two, or whatever. You don't know how many, you can only see it in the fixed asset register, how many vehicles there are, but we just know that it's more than one. So, and then the accumulated depreciation also, this one is 86,272. This one is 126,272. So which means there's more than one vehicle. So let's start with the opening balances. So now our opening balances will be these ones, because now we are doing the full books of Tannis Boutique. So opening balance, I'm going to copy and paste so that it's faster. Opening balance. So like we said, asset, vehicles and assets. So the opening balance will be on the debit side. So we are going to, on the debit side, have is it 260 or 280? 280. So we are going to have 280,000. Okay. 280,000. And then we have the opening balance of the accumulated depreciation. Also, it has changed because we have more than one vehicle. So that makes it 126,272. 126,272. 126,272. Now we know, let's just say we sold this. So I'm gonna write here, we sold this vehicle, sold the vehicle, same price, it would be same price, but let's sell it 2 months later. So instead of 1 March, 1 April, we're going to say March, April, we're going to say 1 May. Sold vehicle on 1 May. On 1 May. Sold vehicle on 1 May for the same price. So the same price is 75,000 for 75,000. That's what we're going to do. So let's start with this one. The cost, remember the GAAP principle of historical cost means the cost price does not change. So don't worry about the cost price. So we are going to take the same cost, but only for this vehicle, to asset disposal. So now the date of sale changes. So I'm going to just copy and paste so that it's easier, but I'm going to change the month to May, because we sold it in May. We sold this in May. So in May 1, we sold this. So we take this to asset disposal. The only vehicle we sold was the Hilux, not the others. So our vehicles account will have something remaining. It will not have 0 this time because the other vehicles, whether it's 1 or 2, was not sold. So this happens in the GJ, and we only sold 160. So let's see how much is remaining. You're going to say, let me just work it out here, 280 minus 160, just to be sure. Then you get to 120. So we are going to have 120. So 120, this is a smaller side, so we're going to say 120. And then, so that when we add this, we get the same as when we add this. So the top one will always be balance carried down. Balance carried down. You can use the same date, or you can actually, you can do the balance carried down at the end of the year. So it will be when the year ends, your balance carried down. If you didn't sell anything else, your balance carried down at the end of the year. Okay, let me just take this down first so that I have the formula already. So we are going to say 2018 February, when the year ends, if nothing else was sold, February 28, we are going to have a balance of this. And then this one will be will be brought down to the following year, which is going to be March 1, 2018 though. 2018 March 1. 2018 March 1 will be balance brought down of 120. So as you can see, let me do it the right way. So these ones are underlined, but I'm just gonna put a box. It's easier on Excel, but you know that this means underline, double underline at the bottom. So when the year ends, we sold a vehicle costing 160, so we are remaining with vehicles worth 120. So unlike it's not 0. When you start the new year, you're going to have, if nothing else happened, you're going to have an opening balance of 120 because that's what you have. You sold the one for 160, but you have this one. So that's what happens. But here, this depreciation is for 31 March. It's for 1 March, 28 February, which is 1 March. So it's for 1 March. But we didn't sell it in 1 March. We sold it in May. So we need to update the outstanding depreciation, because if we are going to take this depreciation only, if we are going to take this depreciation, then we are not countering those other 2 months, because if you say from 1 March, you count March and April, that's 2 more months. So let's do the depreciation let's do the depreciation. So what we can do now is all the depreciation. So we're going to start with the one we sold, and then we can do the rest of the cars. So the one we sold, they said it costs, okay, let me check it. It is costing 160, and the accumulated depreciation was 86,272, and they use the diminishing balance. I think I saw that day, diminishing balance method. So this is how we're going to calculate it. So we are calculating the sold vehicle. I'm going to say here sold vehicle depreciation. So I'm going to say, so it's going to be 20 over 100, because that's 20%, times, if it's diminishing balance, you're going to say 160. Where am I doing it? No, I don't want to do it here. Sorry, I want to do it here where we are working. So we are going to say 20, so sold vehicle. Okay, it's part of this one. Sold vehicles, 20 over 100. Now let me make things very clear. So we are sold vehicle is going to be 20 over 100 times, if there's a comma, I'm going to change months, times 160, because we are doing just the sold one, minus, remember it's diminishing balance. But we can actually take, I'm going to show you now. So let's just do it. Minus 86,272. We can do that, or we can, because now we are finding the carrying value, or we can just take the carrying value because we are given. Here's the carrying, we could have said times 73,728. But now we are given the carrying value. So it's fine. So we just do this. I'm gonna use my calculator here quickly. So it's okay, this calculator doesn't want to work. So let's just say I'm gonna use the computer. Times 2, 0.2, which is 20%, times carrying value 73,728. Okay, no, I didn't say equals. Let's say equals. Let me put a 0 here. Okay, so is that equals? Yes, so this is the 20%. So okay, guys, how many months did you sell it for? I'm sure you did say that in your minds that we are not done. So normally we would have said 12 over times 12 over 12, but we only did 12 months. 2 months. We only have it for 2 months. So I'm going to say here equals this one times 2 over 12. Then we get our, I'm going to round off 2458. So 2458. I'm going to say our answer is 2,458. So do you agree that our depreciation for the sold vehicle is 2,458? How do you record that? You debit depreciation and credit accumulated depreciation. Let's do that. So we are going to come to depreciation here. On this date, we are going to say debit. So when we debit, our contra account is accumulated, lated depreciation on vehicles, and then you would still report that in the GJ. So GJ, and it's going to be 2,458. Going to do that. And then is double entry complete? No, it's not complete. So if we are going to debit it here, then we need to credit it in the accumulated depreciation. But I'm going to change the account. So we are going to come here. Okay, I don't need to repeat the date. So this will be the amount, but the contra account now will be depreciation. So we are going to say depreciation. So we've recorded the sold vehicles, but so that we're quicker, let's record the rest of, or let me say other vehicles. We don't know if it's one or more, so we say other. I can even say this, or just say other vehicles. So that one, the others. So what is remaining? Listen very carefully. I'm going to do this one by one so that you understand. So we first, so the total the total amount for vehicles is 280, but we are removing 260. Let's see. So we already see it's 120, but I want to work it out here. So let's work out what we remain with. We say 280 minus 160, then we are remaining with 120. Do you understand? This is what we're remaining with from the vehicles. Then from the accumulated, we have 126,272 minus the accumulated depreciation of the vehicle that we are selling is 86. You remember it? 86,272. So remove what we've sold because we've done it here. So remove. So we're removing it to make it easier. We are removing this and this because it's done here. It's done. So remove it. So we remain with, okay, I can't use a calculator. Something is wrong with it. So we are going to say equals 126,272 minus 86,272. And we remain with 40,000. So this is what we remain with. So we are remaining with accumulated depreciation of 40,000. as you can see. Then now we can do our depreciation. So this one is going to be depreciated for the entire year. Let's assume nothing else happened. It wasn't sold. So 20 divided by 100 times 120 is the cost price minus accumulated, which is 40. Do you agree? I hope you agree. Then it's going to be, what's the answer? What is 120 minus 40? That will be 80. So 20% of 80, let's just do it. My brain is not functioning properly. Let's say equals 0.2 times 80. Okay, what did I do wrong? Oh yeah, I know what I did wrong. I must use the actual multiplication. Yeah. That gives us 16,000. Okay, 16,000. So that will be 16,000. So do you agree then that the depreciation for the rest of the equipment, the rest of the vehicles is 16,000? So let's also record it. Let's record both. So you're going to debit depreciation. There we debit depreciation, but now this one is at the year end. So we're going to say 2018, because this is at year end, 2018, February 28. So depreciation on vehicles, we don't have to specify here on the on here, because here we write accounts only. We know what we did. We can have a note or somewhere to record what we did, but here I only want accounts. You can, yeah, I want accounts for now. I'm going to teach you how to show this working later on. So we have 16,000, but double entry is not complete. So we take it here, same date. We take it here, same date, and then depreciation, and then GJ, and then 16,000. So this one is 16,000. And we know we are done. Accumulated depreciation is done. But now tell me, which one are we removing? We are not obviously removing all of this. Remember what we are removing. So you can indicate here, but usually people indicate on the, it's better to indicate on the, okay, it's up to you, but you can indicate on the asset disposal. So, okay, no, I didn't finish this one. Let's finish this. Sorry, I hope this won't get you confused, but I need, then we are going to put this one here. This one we debited here, but we never, we credited it here, but we never debited it here. So let's do that. So we're going to debit, but the contra account is vehicles. Then this other one, which one are we removing? I'm going to write it there. Actually, let's write it there. So the one we are, I'm going to do the working there. The one we are removing, asset disposal, has the opening balance of 86, which we worked it out here, 86,272. And then we also added the 2 months, which is 2458. So those are the two that we are removing. So that's what I meant, that update it first and then remove both. 2458. Update it first and then remove both. So this is what it's going to be. That's how it's going to look. But I want all of it to be, yeah, so like that. This is how it's going to look. So let's edit. I didn't add that. Equals 86,272 plus 2458. So the whole amount that we are removing, including the updated depreciation, is 88,730, and that is also recorded on the GJ. And then it is debited here. So which means we are going to credit 88,730. We are going to credit here 88,730, and we are going to say on the same date here, because when we removed it on the same date here, we are going to have accumulate, let me just copy and paste, accumulated depreciation on vehicles. So that's the hard part. We're done with the hard part, but it's not so hard if you keep practicing. We're done with this one. So we can actually, let's first close off this one. This is the smaller side, obviously. So I'm going to make it easier. So we're going to do this. And then we are going to say, okay, I'm going to say here, minus 144,730. Then we get 56. So it looks like this will be 56. See if we get the same one when we add. Yep, 144,730. So this will be then the, so on the last day of the year, again, this is what we're going to have. Balance carried down. The one on top will be balance carried down. Notice that I didn't skip a line. You just write it like you just write it one under the other. If there's a blank space, it should be as close to the total as possible. Then we are going to, in the following year, we are going to, I'm going to take this one and then just change the year. So the opening balance for the following year, okay, what did I do? I didn't paste. The opening balance of the following year is going to be 56 because we've removed the one that we sold. Balance brought down and it's 56. After removing the one that we sold, this is what we remain with. So our assets, our accumulated depreciation is up to date for the end of year. Because remember, usually we are required to do depreciation for the end of the year. So it's up to date. And then now let's do the asset disposal. So what is the next step? After updating depreciation and moving both here, the next step is to credit the sale. Sometimes credit the cash here, you credit it, you debit it in bank and you credit it here. Sometimes you don't sell it for cash, you sell it for let's just pretend in this case we sold it on account, we sold it on credit, yes, on credit. So we are not going to say bank here, we are going to say creditors control because we're going to creditors control. Creditors control here. Instead of bank, we have creditors control. Then, no. Oh, why are you not correcting me? Who owes who? Who owes who? We are selling. We are selling. They owe us. So it's debtors control. You probably did correct me, didn't you? So it's going to be debited in the debtors control account because debtors control is an asset, then it's credited here. So this one will always either be bank or debtors control. Then it's also done in the GJ, just like this one is done in the GJ. And then we are selling it at the same price, 75,000. So let's do this again. Okay, maybe we should have made a loss, but I'm sure you'd understand. So it's still a profit, it looks like it, because this side is higher and the difference is 3730. But you will get instances where the side is higher. So if this side is high, you don't write anything underneath. You just write the difference this side and you call it loss. That's the difference. And you call it loss on sale of asset. So maybe I should have done that one so you can see. So say profit on sale of asset. Profit on sale of asset. And then this one is once again underlined like what you do with totals. And then we are not done, double entry. If we debit this one, we must credit it in the profit on sale of fixed assets. So it's going to be, let's just write the same date that we sold it at. So we are going to say asset disposal here. That's the contra account. And the GJ again, and the profit is 3730. Just remember, if it's a loss, you're going to say loss on sale of asset, and it's going to be a credit here and a debit here. This is a profit. It will go to the statement of comprehensive income under income, other income. Otherwise, that is it. Thank you for listening. Goodbye, grade 11s, and all the best.